Hello and welcome to the weekly market view from Capital Spreads. Bill's with me. Good to see you, Bill. How are you?
Freezing cold.
Are you? It's a bit chilly, isn't it?
Yes.
Yeah, exactly. We're getting that Arctic wind coming down, and actually, that, funny enough, that seems to be affecting the FTSE a little bit. We just sort of, it's sort of come off the boil really, and we seem to be in a bit of a consolidation phase. 63.50 to the upside, 62.50 to the downside. What does that kind of, do we see further weakness or a continuation of this consolidation?
Well, as we talked about at the end of last year, I'm still expecting 6,700 by the FTSE. I think we're going through a healthy correction. I think we had one of the best Januaries we've had since, Queen Victoria was a teenager. But I think one of the things where I'm still positive with the FTSE is if we can think back 5-7 years ago, the major movers on the upside of the FTSE were the banks, and the banks are under a little bit of duress right now, and also the mining shares. And although we've seen a strong movement in the underlying commodities, we're not seeing it in the mining shares. And once that seems to be corrected, as I say, I think we'd easily see 6,700 by the end of this year.
Okay, so you're still very, very bullish.
Yes.
And you mentioned banks. Obviously, the highlights this week have been on RBS and LIBOR scandals and things like that. But rather than talking about fines that we kind of knew were going to happen, and of course I've got a feeling that there'll be plenty more to come. Let's talk about central banks.
Yes.
So obviously Mark Carney is due to replace Sir Mervyn in the summer, and he was in front of the MPs this morning, and I kind of felt that there was a bit of a mixed message coming from him. He sort of said that we need to stop unconventional monetary policy, and the markets rallied on the back of that, as did sterling. And then throughout the rest of the testimony he was saying how he needs to expand monetary policy and stimulus. So I thought very conflicting. The FTSE then sold off as a result. How do you see him playing things, and how do you think that will change the Bank of England?
I guess the problem that I have now, it may change come I think probably the 1st of July, is he's having now to play a little bit more of a political game, because the comments that he made, let's say, 6 weeks ago, or whenever he was chosen, and the comments that he made at Davos was the same thing he said this morning. We need unconventional. Now I'm saying unconventional for the simple fact is I know he does not believe in the mandate that both the Bank of England and the European Central Bank have in reference to 2% inflation 2 years out. Excuse me. He grew up under more or less the mandate of the Federal Reserve, which was non-inflationary growth. And I think that's what he was trying to balance. And as you said this morning, when he's talking about not eliminating austerity, but making growth now the major factor rather than inflation. As you saw, we stayed above 6,300, 157. And we also, looking through, we also see gilts back up 4 or 5 basis points, feeling that maybe we won't get QE extra.
Yeah, so he's definitely going to be changing the mandate by the sounds of things. That will probably mean some structural changes as well, maybe to the people that work there even. But let's move on to the ECB. Of course, there's no action there. Now, you've been calling for a rate cut for a while,
yes.
And now where's your call?
I'm still there.
Yeah, you still think it's going to come?
I think we're in the March to June scenario. And at 137, if you look on the option-adjusted spreads, that does add 18 basis points of tightening if you look at the December contract. And one of the things we can't have is we can't have any tightening. And also one of the things that, we're starting to see now is not a break with tradition, but we're seeing some of the Eurozone people say, well, we think maybe the euro at 135, 137, not giving a number, they're saying a stronger euro could have a negative effect, okay? And then of course you've maybe got the Germans saying, no, there's nothing problem with the euro. Well, Germany and France are the only 2 real Eurozone countries that are doing okay. But even if we go back to 2004, 2007, the ECB presidents at that time, when we were in the 137, 140 range, were very much concerned. And even Mr. Trichet, one of the last things he said last year was, you know, like 135 was that proverbial line in the sand. And I do feel that we start getting 135, 136, 137, and being a stay-at-home currency, okay? I think it's going to have a knock-on effect, especially in Germany and France. So, yes, I'm expecting at least one rate cut, okay? And you know, if the numbers don't improve dramatically, you know, they may have to do another one in late 2013.
And so you're sort of pinning your analysis on there being a rate cut on very much the exchange rate.
Yes.
What effect, though, has the LTRO repayments had? Does that sway your mind at all? Or?
Well, one of the things that we have seen, and if you look through, and if you are a central banker, and I know our viewers probably don't look at these numbers like they should, you know, the monetary aggregates, if you are a central banker, that is one of the most important numbers, M3, M4, M5, you know, the lending, the borrowing. Well, you're not seeing any lending, and you're not seeing any borrowing. And this was, maybe this is the wrong wording, it sort of masked the real problem. And you're not seeing any of the monetary aggregates grow, okay? But I know, you know, we had a positive piece of data yesterday, I think for the first time in 3 years. Not that they were improving, but we didn't see any more demise of the Spanish housing market. So, you know, so if you are a central banker, there's a lot of room for the monetary aggregates to improve. There's a lot of no problem with the inflation numbers. Okay? I mean, you still got the gilts at 165, and although, you know, you saw today with the Spanish auction, maybe, you know, maybe I shouldn't use these words. Is there a problem with, you know, with our good friends in Italy and Spain? Okay, and so all of a sudden, you know, that sort of took the euro down, you know, almost 2 big figures earlier this week.
Well, we'll see. Well, that rate does come, Bill. I know you're pinning your hopes on it. Thanks very much indeed. Good to see you.